Everybody, what is happening? It's Bill with Franklin Loan Center, and man, Trump, I guess it was this weekend, via Bill Pulte announced that they may be thinking about a 50-year mortgage. And by the way, this is probably all getting way in front of everything. I mean, I can't imagine the amazing amount of effort that it would take to actually roll out a 50-year mortgage. But let's just run with it, right? Because it has gotten a bunch of attention, and it's being posed as something that could really make a difference with affordability. So I just wanted to take a peek at some different numbers and try and figure out, like, okay, so what does this really mean? So what I did is I just looked at a $600,000 mortgage. Obviously, we can use any number, but I used a $600,000 mortgage. And I assumed that that a 30-year fixed rate is 6.5. Maybe it's lower than that right now. That's not important, right? So let's just use a 6.5, and that payment comes in right at $3,500 for the principal and interest on that mortgage, right? So it's like, okay, cool. Let's scale that into a 50-year mortgage. Like, I frankly thought the savings was going to be significantly more. The difference in the payment, roughly $300, because there's really something I need to tell everybody that, look, I mean, there's the yield curve is very real, and the longer you tie up someone's money, the more they expect a higher interest rate, right? So just like if you take a 15-year mortgage rather than a 30-year mortgage, you're going to get a lower rate on the 15-year mortgage. The opposite is obviously going to be true here, right? So there's not even a market for this right now, so you really can't predict what it would really look like. But I just added a quarter point to the interest rate, right? I mean, for what it's worth, it's a much bigger difference between a 15 and a 30. But let's just use a quarter point difference. So when you do that, so if I compare a $600,000 mortgage at 6.5% over 30 years versus a $600,000 mortgage at 6.75% over 50 years, the difference in the payment, just about almost exactly $300, right? So, I mean, look, I don't want to act like $300 is like, look, I mean, it's $300, right? It's somewhat significant. But, I mean, like, my immediate thought is let's figure out another area where we can get $300 in your budget, right? Something like that. I mean, so there's that, and then of course there's the whole argument for, I mean, it would literally cost hundreds of extra thousands of dollars if you paid this for the full 50 years. But it's not even fair to really think about it that way, because almost nobody completely amortizes out their mortgage, and they're sure as hell not going to do it on a 50-year mortgage, or it's going to be very unlikely. So I guess I would really put this into the bucket of, look, options are good, right? I mean, to me, probably the 50-year mortgage person is probably a similar type person that I would talk about with like an interest-only program. Probably a shorter term hold, probably something that, you just know you're going to trade out of fairly quickly. Maybe someone that's just looking for a slightly lower payment because they have some variations in their income. Whatever it might be, right? I mean, there's no one size fits all for everybody, right? I mean, just like we don't put everybody into 30-year fix. Some people could take different amortizations. Again, some people take interest only. For what it's worth, there's a bunch of people out there that there is if 40-year mortgages are available, not conventional FHA or VA, but they're available in a bunch of the other alternative doc programs and things like that. So, I mean, this isn't unprecedented. Do I think it's a magic pill that's going to all of a sudden, change the affordability picture in the U.S.? Absolutely not. Again, you're looking at literally a 10%, less than a 10% difference in that mortgage payment. And it's, again, it's just not that significant. So, look, I think it's again, another headline that's worth paying attention to. But do I think it's something that's going to really change things and make a massive difference to affordability in the U.S.? I absolutely do not. We'll see what happens if it even ends up rolling out, and then we'll play with it and look at each individual and assess their situation and figure out where it makes sense, right? So, the 50-year mortgage, I guess, again, there's no mortgage out there that's one size fits all, and this will fit that bill. So we'll see what happens. But I just wanted to kind of chime in on it. It's unbelievable to me how much, I've seen a ton of play on this, and one thing I'm really clear on is this isn't some massive affordability boon that everyone's going to be able to take advantage of. So that's it. I'm Bill. I'm the Franklin Loan Center, and I'll see y'all next week.